Hello and welcome to American Mogul. Today we are going to talk about GameStop and possibly being a watershed moment in the stock market. Now, to let everybody know, I am not invested in any way in GameStop. I'm neither for or against GameStop, but I just want to talk about some issues that I see coming. GameStop, as you know, is predominantly a video gaming resale company. Well, they sell and they also have a resale program, and they sell other things as well. GameStop intrinsic value is $5 a share. Yeah, that's their intrinsic value. GameStop has $1 billion in debt and about $450 million in cash. So I think it has enough money to continue going for a number of years. I do not see it going out of business, but that's just my opinion. Well, not right away anyway. We also see that the gaming industry is going more online, and you can order games online. Is that a positive or a negative? I'm not sure, because you have a lot of people who are very nostalgic and they want the actual hard copy of the game. So there's a built-in demand. When you look at what people are saying, that this is a pump and dump. First, since the beginning of the stock market, there have always been pump and dumps. There were what people called boiler rooms, and there's a lot of meanings to the boiler room, right? One consideration meaning that you put a pot of water to boil, steam rises, and then you boil out all the water and nothing is left. Now, the water being the stock price, the pot being the customers, and the flame being the investment advisors. So the investment advisors get in first. They set the water to boil, expansion, evaporation, right? And the price rises with the steam. And then they get out and customer left with nothing. Another consideration of meaning is that the customer is a frog. You put in a pot of water and then you set it, and eventually the customer account dies. And there are also other meanings, but the big issue here is this a watershed moment in the stock market? Well, knowing that the intrinsic value of GameStop is $5 and currently at market close about $65, it seems a little bit overvalued to me. But that's my opinion. You might think it's going higher. Some of you might think it's going lower. But what does it mean for overall stock market? There is a war right now between institutional investors and retail investors. This war has been going on since the dawn of stock trading. And there are times when a retail investor get upper hand. But most time, more than 90% of the time, the institutional investor wins. But because they just have more funds, they can be solvent longer than you can be solvent. So we are looking at GameStop. I think this battleground will drive the price higher, yeah? How much higher, I don't know. But if it get over $70 a share with intrinsic value of $5, I might be inclined to short the stock. But in this crazy economy, who knows where it could go? Because right now, imagine you are sitting on board of directors for GameStop, or you are the CEO, CFO, and your stock went from $2.50 to over $60. Yeah. If you issue 100 million shares, yeah, you are going to dilute the share count, but you could raise upwards of $5 billion or more. Take that money, pay off the debt, and you have 4 to 5 with the existing cash on the books, 4 to 5 billion. You can reinvent the company into something different. And the stock could go much higher. Or people seeing the dilution will decide time to get out and stock could go lower. But more importantly, it is a bellwether for the situation in the stock market today. If you've seen my past videos, I believe there is a 20+% correction coming within the next 4 to 6 weeks. There are many factors involved, and I believe it will rebound, but then by end of year, the stock market will be 30+% lower than it started the year. This battle with GameStop between the short sellers, institutional sellers, and the retail buyers. Who gonna win? Well, let's see. Who has more money? They're gonna win. Because never underestimate the ability of institutional short sellers to endure pain. They've been doing it a long time. They are not emotionally attached. However, this time could be different. This time as a sense of principle, to kind of what they would consider put the retail investor in their place. I will be watching it very closely, and I hope that you will be careful, book some profit, yeah. If you got into GameStop anywhere under $20, it has tripled, quadrupled, quintupled from when you bought it. Take half your position off. You'll get your initial investment back plus profit and let the other half ride. Yeah. But that's my opinion. You do what you want to do. GameStop is in a difficult situation in a market. Technology is leaving them behind. However, they have a sort of nostalgic value, but with current conditions, it is a rough sledding for them in the future. I believe if they issue new shares, they're going to need to issue about 100 million and get anywhere between, depending on the price of the stock, between $5 billion and $7 billion minus pay out their debt. They should have about $5 billion to reinvent the company. Plus their intrinsic value would be much higher. They might double or triple their intrinsic value. It all depends what the board of directors, CEO, CFO, leading executives are thinking. But it would be irresponsible for them not to take advantage of this unforeseen all-time high in the price of the stocks. You need to look at your investment strategy. I don't agree with the talking heads on CNBC, on financial news networks that are saying that this is the Robin Hoodies that are driving. This is normal markets. People pump and dump all the time. There is no, I mean, they spent all day pumping stocks on financial news networks. What is that? How come they are not held responsible for their manipulation of the stock market? It is a long time that I've heard a negative report on any stock on financial news networks. Yeah? For me, GameStop is a watershed moment of this market. How will it play out? I don't know. But it could be the beginning of a downturn. As people are in a frenzied mode and markets seem only to go up, this war of attrition will play out in the next few weeks, yeah? And we are in earnings season, and understand earnings season is from lowered earning expectations, yeah? They say people are beating expectations, but you lowered them. Of course you're going to beat them if you lower them. Unfathomable for me to understand how they are considering retail investors pump and dump doing something illegal when the news networks, the major investment firms, they are doing pump and dump all the time. All the time. Right? They take, for example, a major corporation, lowers expectations. They lower their expectations, their estimates. Then they come in and beat the estimate, and they go crazy at how good it is. But you're beating lower estimates. Retail investors are not like what it was 20, 30, 40 years ago. 20, 30, 40 years ago, you bought the newspaper, you looked at your stock, you read the financial news, and you made decisions based on that. Was it reported properly all the time? Of course not. But now you get information instantly. You can go on chat rooms and discuss. You can go on Discord channels and discuss any company that is listed on the stock market. You can watch YouTube videos, listen to podcasts, and get a deeper sense of what is going on. How is that stock market manipulation? The stock market manipulation happens with central banks, governments, financial institutions. Those are the pump and dumpers. But they never get in any trouble. But God forbid that a retail investor like you and I make a little bit of money in the stock market. Yeah. Like, look at the banks are raking it in because of retail investment. Retail investment has gone up 300, 400, 500%. And with the new stimulus package, you're going to go even higher. And, okay, you're in a risky part of market, options trading. Call options and put options are very risky, but in this type of environment, in my opinion, I think retail traders have found a way to make a bigger bang for their buck. All people are trying to do make a little bit of money. GameStop, to me, a watershed moment, right? And how it plays out will tell you the direction up or down of stock market. I think that there will be a push, there could be, in my opinion, push up to $80, $90 a share. Maybe a little bit higher, maybe a little bit lower. But then they are going to try to crush that stock. So be very careful how you are invested in GameStop. I like the company. I've always liked the company. Back in the day when I was invested in GameStop, it had dividend. It had a business model that I liked. However, stock appreciation and the dividend put me in a situation where I was up about 20, 30%. And for me, that was enough. I sold out. Yeah, this back in the day, few years ago. Now, I still like the company. I think they have opportunity, if they issue new shares, to refund the company and then redirect how the company proceeds forward. Could be something very good. That could justify these prices in 4 or 5 years from now. However, right now, prices are, in my opinion, unjustifiable. And you need to think, do you want to fight this war? Yeah? You have first mover advantage, yeah? Everybody got into it. You just don't want to be the last person in it. I think big financial institutions are going to try to smack it down pretty hard. And when you look at where it could go down to, remember, book value, intrinsic value is $5. $5. Would it go back down there? Well, it got down to $2.50 roughly. So it came from there. It could go back there. But it could also go 80, 90, $100 plus. We don't know. There is a lot of hype and extraneous factors going on here. Be careful, be safe, and act wisely. Yeah. For me, I'm going to watch this because it's a directional play on future moves of the stock market. I think we are at near a blow off top, and this could be the linchpin that sets it off. So God bless you and God keep you safe. Goodbye.